Hello, everybody. Welcome back. Welcome back to the chat room. This is Ed Ponzi. Great to be here with you this evening. I'm speaking to you on Monday night, August 4th, and got a bunch of questions. Thank you so much for sending them in. I'm going to get to them right off the bat. And first question comes from a friend of ours who asks, I've heard people say one can do very well trading only one or two currency pairs. One person even went on to say he only trades Euro USD, and he has done it successfully for years. According to him, he follows and knows everything fundamentally about the pair, making him an expert in the Euro USD. What do you think about this strategy? Well, I'll be honest with you. I don't think it's a good idea. And but let's look at it this way. If you're starting out, you got to start somewhere, okay? And so if you're starting out, I would like you to focus on one pair at a time. So, and if you're just starting out, the first pair to focus on should be Euro USD. But you're going to notice something, and that's that some pairs go into long periods of time where they are just not good to trade, where they just don't do much. Something out there always looks good. There's always going to be a currency pair showing opportunity. I mean, right now even, Euro USD looks great to trade. But there have been times when it's been a nightmare to trade Euro USD. And during those times, why would you force yourself to stay with just one currency pair? That doesn't even make sense. You can know all the fundamentals and all the technicals and then stop learning, right? You should know as much as you can about the Euro USD, about the fundamentals, about the technicals, but there's no reason to stop there. Let's put it this way. If you really do know all the technicals and all the fundamentals, and I'm suspicious of anyone who says they know all of anything, but if someone out there says they know all the fundamentals and all the technicals of Euro USD, then they already know half the technicals and fundamentals of other USD pairs. They certainly know the fundamentals, right? So why would you shut yourself off from something like pound dollar, which might be a better trade? Certainly it was last year. Right now, Euro US dollar is a good trade, but last year, pound dollar was a better trade. And why would you shut yourself off from that? There are going to be times when it's hard to find a good trade in one currency pair. So are you going to place bad trades in that currency pair? I couldn't find a good trade in Euro USD or any other currency pair like every day. It just doesn't happen if you're really being selective. So I have to say I disagree with whoever told you that you should just specialize in one pair. It doesn't ring true with what I know from being in the business for many years and knowing a lot of true professionals. I've never met a true professional who ever claimed to just specialize like that. Okay, so caveat emptor, okay? There are all kinds of people out there giving advice quite freely, right? So be careful. Okay, thank you for that question, Francis, and it's no reflection, obviously, on the person asking. It's a perfectly legitimate question. Let's talk about the guppy. The guppy is pound yen, and I'm still in this thing. I'm down 60 pips. My stop's way down under that red line. My stop's at that red line. I mean, it's not going against me. It's not going in my favor. It's just annoying, right? Good day. Can you advise on the 4-hour on this one? So we'll go to a 240-minute chart. And we don't advise, by the way. Whatever. I might tell you what I'm up to, or I might give you my opinions on things, but I'm certainly not recommending that you have to do anything. Or I'm not here to act as an advisor to tell you what to do. I'm here to teach you so that you won't need anyone to tell you what to do, hopefully, right? That's what we hope will happen. So can you advise on this chart? Is there a topping pattern, head and shoulders reversal? Looks like a retest of the neckline. Close below that neckline, and thank you for your call on JCP. JCP got hammered today. I guess he wrote that before today, huh? JCP took a beating today, but it's actually not done badly for us at all, even after today. Is this a topping pattern? It certainly could be. I mean, I have to look at this realistically and say, if I drop the line right here, that could be a topping pattern. And, if the markets turn ugly, the yen would become strong. Is that trend line broken? Well, mine is. Trend lines are subjective, but my trend line is broken, but we're right back up to it. I mean, we could come back over it. So I already have my stop in place. It's way down here under these lows. So, I'm playing the big game for this one. I've actually been in this one for quite a while, and I'm collecting interest. And you should be too, if you're long. But could it be a short, I guess, is the question. Absolutely, it could be considered a short. If it falls, it could fall all the way down toward where my stop is located, right? There's a lot of support just under 170, and that's why my stop's under that level. So it could be considered a short. I can't say that that's a bad. If it breaks down, what would have to happen though? I think stocks would have to really take it on the chin for this to break down. The interesting thing to me is that the pound doesn't seem to be responding to good economic news. Earlier today we had construction PMI. I think it came out at 62.5, beating estimates, and the pound did not do anything. And you can see it's been just slouching downward here for quite a while now, breaking down on this chart too. So every chart that I can see, the pound is starting to break key support levels. I'm still in it because, I tend to see my trades through to the end, but at some point I might change my mind. I mean, if things turn ugly, I'm not just going to ride it down. And just keep in mind too, the fact that I have a 400 pip stop on pound yen does not mean I'm taking a disproportionate risk. I simply adjust my position size, trade a smaller position size, and then it's not as risky. It's just as risky as any other position, no more, no less. Okay, great questions. Let's keep them coming. Okay, great stuff from the readers here and the viewers. It's good to see everyone out there. We've got more. Euro pound. I am out of the euro pound, says our friend from South Africa, and what a trade that was. I got to tell you, I'm very proud when my students can just catch a big move like that and sit with it, because sometimes being on the right trade and staying with it is very hard, and that's why I created FXED, so that you'd have a plan to stay in, and most of my biggest wins have been from FXED trades. And here's a beauty from Cobus, who shorted it up here, wrote it down, and finally got stopped out when it popped through the 20-day moving average. So, it's going to happen sooner or later, but what a great trade that is. And the thing is, I teach this stuff to people, and they start making 200 pips on a trade or more. We had people making 400 pips on trades last year. And, the market was moving a little bit more back then. But, they're not all going to be winners. But once you do win big like that, I do think it changes you in a good way. In a good way. I think winning big like that almost forces you to think big. Like, okay, now I get it. My account just jumped up by X amount. I just made 200 pips on a trade. Now it makes sense to me. Now I get it. And that is very often a turning point, and you realize that there's nothing to be gained by playing small. And it's funny. It's a saying that you hear, in life. There's nothing to be gained by playing small. And I don't mean that you should bet heavily on trades or anything else, but what's the point of going through all this education and learning all this stuff and then basically fishing for minnows, just trying to make a little bit here and there? You're going to see after a while, that making a large profit on a trade is where it's at, and it changes you in a positive way. I made a good profit, 200 pips, got stopped out with a small loss in the added position. I will not try this pair soon. Excellent, excellent. I love that attitude. He says he will not go back in soon. You should not even look at this pair because you just had your greatest victory, and that can be emotional. And that is linked to this currency pair. So you might have a predisposition to wanting to trade this pair or wanting to short this pair since you made so much money shorting this pair. And you really shouldn't. You should disassociate yourself with it because having strong feelings about it one way or the other, positive or negative, is not necessarily good. You shouldn't have any feelings toward it. And right now, that's going to be impossible, isn't it? So playing amateur psychologist here, don't even look at this chart for a while. Go find some other stuff to trade, and then come back to this later on. But that's often what happens, is especially like we have a really good trade on a currency pair, and that's all we want to trade. And we don't realize, okay, why did you get in this pair in the first place? Well, maybe it was the best setup. Maybe it was the one that was trending the best. Maybe it was just hitting that 20-day moving average and it kept dropping. Fine. See if we can find the equivalent of something like that out there. And just leave this one alone for a while. Great stuff. If unclear, stay away. Good stuff. Man, this is nice. Good to hear. Any thoughts on Euro Yen? I believe these questions come from Asia. Good to see you, my friend. Euro Yen is in a downtrend channel. I would agree. It's not a strong downtrend. Just keep in mind that, well, the euro is pretty weak against a lot of currencies right now. We're still short Euro USD. I'll get to that in a minute. I think you could certainly say this is in a downward trend. But just keep in mind, right, that they're not all created equal. And it's not a really super strong trend. The yen is really going to be dependent on what happens with the stock market. So for my Forex people, be sure to stick around for when I talk about the S&P 500 because that's going to have a massive impact on the yen. So yeah, downward channel, I would say so. On euro pound, can you call that a reversal or simply a retracement? Gives me goosebumps to buy the euro nowadays. Well, that's a big, you cannot say, and here's the way I look at it. I cannot say that this is now going to turn and go up the other way. I could easily imagine that happening, but I can't say that that's going to happen just because we had a big move. That big move may have been that a lot of people were short this currency pair and they decided to cover. So it could be the beginning of a trend in the opposite direction, or it could be nothing. Maybe we're going to go sideways for a while. So I really don't know. It's a good question. It's not possible to know all things from the charts. The charts, sometimes the chart is telling you something. Sometimes it's not really telling you that much. As far as what happens next here, I think we have to let euro pound figure that one out, right? And then we'll go and look at it. Question about the CFTC report. I'm going to pull that up now because there was some interesting stuff that occurred. And we'll go to COT report, commitment of traders. And I don't know if this question was sent before or after. Whoops, wrong one. I don't know if this question was sent before or after these figures were updated on Friday. But we're going to go to the euro. Okay. Question is, there are 171,000 long positions on Euro FX, only 13,000 on the short. That's not what I'm seeing. I'm looking at non-commercials, Euro FX. Now, you may have sent the question before this was updated. But look, I'm showing 56,000 long and 164,000 short. But it is very interesting to me. You know why? Look at the change from the previous week. The shorts added 17,000 contracts. The longs, they closed out a few contracts, no big deal. And by the way, it's instructive to look down here. Look at the number of traders. There are only 78 traders holding those 17,000 contracts. These are the big traders, right? The big boys and girls. You know, those are some size trades. There are only 78 people, 78 or entities, I should say, not necessarily people. They're not necessarily individuals. There's 78 entities holding 164,000 contracts short. Could be a hedge fund, could be, you know, could be George Soros, could be anything, right? And but to me, I'm short. It makes me a little bit nervous that now everyone is beginning to see it my way. I have to be honest. It makes me a little bit nervous that I'm being joined here by these 17,000 contracts on the short side. I kind of like it when I catch a move going one way and everybody else is caught leaning the other way. That's more helpful. If everyone thinks what I think, then it's less helpful to me. Does that make sense? In other words, all these shorts will eventually cover. They're all going to buy in the future. All of them will be closed at some point. That's going to take some buying of euros. And right now, that's the last thing I want to see. I want to see some selling of euros. Okay. Here's where we are on the euro trade, by the way. We hit that first target, which is that blue line. It's now a dotted blue line, a broken blue line, and we're basically right there. The stop is now at break even. The stop is 134.65. We are sitting at the first target, and our next target is all the way down at 133.05. So it's a question of, will we be stopped out for a small profit, or will it turn in our favor for a big profit? I love the sound of that. It's either going to be a small profit or a big profit, no in between. That sounds good. I have to admit, I kind of like that. Okay. All right. Lots of potential here, right? A lot of potential here on the downside. We know that Europe is planning quantitative easing. We know that they're planning LTROs, TLTROs now, all right? Long-term refinancing operations. Big loans to banks is all that means, right? But we know they have stuff up their sleeve, and we know it's coming. We haven't seen it yet, but it's coming. Okay, and so I'm happy to be short. I'm happy to be in a position where I can't lose. I'm either going to win small or win big. I don't care how long it takes. I'm not the least bit impatient with this. Also, we are still long Euro Swiss. It's perked up for us a little bit. We're up 20 pips on that. No big deal. No big deal at all, but we're up 20 pips. And it's a little bit of a hedge for my position here on Euro. Let's continue with the questions. Any thoughts on the pounds? Pound yen and pound dollar both hammered lately? Yeah, they are breaking down. And the pound is no longer responding to good news. So, yeah, I wouldn't be searching for new pound trades right now. As a normal human being, sometimes losing is hard to take. What do you do to pick yourself up back up? How do you convince yourself there's light at the end of the tunnel? That's a great question, man, because, you know, I mean, when you're new, when you're experienced, you realize losing is just kind of part of the game and it doesn't affect you quite as deeply. I'll still curse now and then, you know, bang my fist on the table. It happens occasionally, I'm not going to lie. But, you know, it's part of the game. Like being an athlete and having a bad game. Even the best players, you know, they either have a bad game or maybe it's not even their fault. Maybe that's part of it too. You have to realize that losing isn't always your fault. You can do everything right and lose on any individual trade. So why do we do everything right if you can lose anyway? Well, there are no guarantees, but if you do everything right on a consistent basis, you're probably going to win more than you lose. So, and if you, and by the same token, you know, you could do everything wrong and still win on a random trade. And the sad part is you may think, if you don't know that you're doing stuff wrong, then you're not learning. So everything is a learning experience. Losing is a learning experience. Make sure that you lose small. I've made every mistake that you can possibly make in this business, okay? And so if you do lose, just make sure you're not going to blow a hole in your account. Keep it, you know, to a small percentage of the account is your maximum risk. And if you're losing more than that, then your position sizes are probably too big. Don't worry about trying to make a fortune overnight. Don't worry about trying to double your money or triple your money. Worry about becoming a good trader, and all that other stuff tends to follow. Okay? And so I would say this. Understand that it is possible to make it in this business even when things are going rough. Understand, you know, learn something every time. If you lose, just try to learn something from it. Okay? There's no shame in losing. The shame is in losing and not learning anything. Okay? All right, thank you so much. What great questions. I think that covers them all. Just great stuff this week. I have just the best students anywhere out there. And so as summer rolls along, things are beginning to move a little bit again. In the world of currencies, we saw some volatility. We're beginning to see volatility in stocks as well. And I got to tell you something, gang. Is it different? There's a saying out there. It's different this time. And the joke is it's never different this time. It's always the same thing over and over again. But you'll hear people say, no, it's really different this time. We talked last time about how this market, the S&P 500, kept coming within one ATR, in other words, about 14, 13, 12 points of 2,000, and then can't do it and always fails. And then this happened late last week. It broke down hard and ugly. And that was after the Fed and after what was supposed to be a really good GDP report. Okay? I am not buying any more stocks until one of two things happens. Either we finally break 2,000, which is like a curse for this market right now, or we fall way down and everything gets cheap. And if that happens, I'm going to need some more shorts on the way down. There's kind of a perfect storm happening out there. And I haven't chosen one particular stock yet, but there's a whole series of stocks that just look awful. And it's a sector that's done well for like 5 years. Defensive stocks. Stocks that tend to do well in a bad economy have done very well for the past 5 years. And now they all look bad. They all look like they're in trouble. And I'll give you an example. This is a perfect example. Kimberly-Clark, right? They make diapers. Look at I'm going to show you the weekly. Look at the last 5 years of Kimberly-Clark. Right? Stock doubled and paid a nice fat dividend. But look at the way it's falling apart here. I'm going to add some volume in. And the volume is starting to perk up a little bit in the last 2 weeks, and it came down hard the last 2 weeks. To me, this is saying maybe the economy is really recovering. But if the economy is really recovering, they're going to dump these defensive stocks. And if they're going to dump them, we should maybe think about dumping them. Now, before I get it specific on stocks, where do I want to be a seller? Do you see this line right here? This is support from this low pivot point, not pivot point, this low pivot of July 10. It's right around 1950. Now, if I throw the 50-day moving average up there, I'm going to throw a simple moving average, 50 up there. That coincides perfectly with this low. So, I need the price to come up to around 1950 to 1955 and that's the point where I'm going to start becoming shorter. Okay? I don't have that many long positions left. And so I'll talk about that in just a second and which ones I'm still holding and why. But I'm getting to be a much more balanced portfolio. I'm getting a much more balanced portfolio now. Soon I think it's going to be 50% long, 50% short, and if the market turns ugly, I could end up being 100% short. It could happen, or close to it. But that area, I think the S&P needs to continue to rally a little bit, and as it rallies, I think you're going to see people unloading some. So what are these stocks that I'm talking about that are getting creamed? Kimberly-Clark, I mean, they make diapers, but the truth is, if the economy is really improving, they're not going to sell more diapers. Does that make sense? They're going to sell the same amount of diapers whether or not the economy, even if the economy stinks, they're still going to sell diapers. But they're not going to sell more diapers if the economy gets better. But other companies are going to sell more stuff if the economy gets better. These guys aren't. People don't have more babies because the economy gets better. And even if they did, it would take a long time to reflect in the stock price, right? Look at how awful that looks. It's just boom. And now look at this one. Colgate-Palmolive. Now notice and see if it kind of has a similar look to it. There's Colgate-Palmolive. I'm going to take you back to Kimberly-Clark. Kimberly-Clark just looks like awful, and it peaked on the middle of July. Colgate-Palmolive looks awful. It's broken its 200-day moving average, and it peaked in the middle of July. What the heck is going on here? I'm telling you, I think that people believe that this economy is recovering, and they are dumping the defensive stocks. They will probably, if they're going to buy at all, they're going to buy stocks that are a little more growth-oriented. Technology, for example. But they are, it's very clear to me. Why? Because those charts look the same. And this chart looks just like both of them. That's Clorox, right? And if you look at Kraft Foods, which has nothing to do with those products, it looks the same. It's the same chart. You see what I'm saying? They're not treating these stocks individually. These stocks are not being sold off on an individual basis. Someone is dumping the whole group hard. And I think it's a macro play. There's probably some big hedge funds that just want out of this sector because A, it's already, these stocks have been running up for years. B, they tend to be high dividend stocks. If the economy is really recovering, then interest rates are going to go up, and that makes the dividends less appealing. Mondelez. Same chart. This one's not under the 200. It's the same stinking chart, gang. Over and over again. Want to make it about beer? Okay, how about TAP? Not as bad. I still see it there, guys. I see the same pattern in a lot of consumer stocks, and this one's not as bad as the other ones, as the ones that preceded it. But these are stocks that, these are companies that are not necessarily going to sell more stuff, like Clorox, right? If the economy improves, are people going to buy more Clorox? Not necessarily. Most people have one kitchen floor, and they're going to mop it, I don't know, 2-3 times a week, however often that gets done. And it doesn't matter what the economy's like. They're going to mop the floor. Got it? Doesn't matter. So the economy improving does not help this stock. Colgate-Palmolive. Do people stop brushing their teeth if the economy turns bad? No. They keep on brushing their teeth. That's why it's a great play. All these stocks are great plays in a weak economy. I think these stocks are all trying to tell us at the same time that the economy really is improving. That's honestly, I think that's what's under it. Now, don't get me wrong. Just because the economy is improving doesn't mean the market has to go up. Heck, the economy sucked for the past 5 years and the market went straight up. So now that the economy is finally about to get good, does that mean the market has to keep going higher? Not at all. Nothing has to happen ever. Okay, so the market could turn and go lower. And you know what? I wouldn't be surprised at all, because you're having a heck of a hard time with 2000. And in addition to that, right, what else is going on? The Fed has cut quantitative easing down from 85 billion all the way to 25, and on its way to zero. By October, quantitative easing is going to be zero, and you already have people on the Federal Open Market Committee who are saying we need to raise interest rates, sooner, not later. So there's already pressure coming from some hawks there. So when you can't fight the Fed, when interest rates start going up, or even the perception that interest rates are going to start going up could really hit this market hard. And it's ripe to be hit hard after rallying for years and years and years, right? Basically tripling from its intraday low in early 2009 of 666. Okay, all right, let's take a look. So all this has me thinking that, yeah, I think the economy might be getting better, but the market might be getting worse. Okay, and you have to be able to separate the two. If the stock market can go straight up in a bad economy for years, it can certainly go down in a good one. Wells Fargo. Wells Fargo. This one will be leaving the fold soon. I'm not going to hold this one. Okay, we're going to lose like $1 or $2 on this. It's no big deal. We're keeping Apple on the long side, going over the long side right now. Keeping Apple. Apple looks great. I'm still in Dean Foods. Again, this is a different type of play. It's come down hard, but it's a different type of play. I think one day they just get bought out. Same thing with ACT, really. This is a Irish pharmaceutical company. Inversion plays are all the rage. That's where a company, U.S. company buys an Irish company and thereby lowers their tax rate by moving their headquarters to Ireland. This is all the rage right now. So I think ACT becomes a very attractive target. JCPenney took it on the chin today. But overall, it's done okay for us. And overall, it still looks pretty good. It still looks like a very big inverted head and shoulders. It's taken forever. But you know what? This is a ascending triangle. So hate the fact that it took the hit today. Looks like it came right up to 10 and kind of chickened out. But I like this one. I'm keeping JCP, ACT, DF, and Apple. Those are my only remaining longs. We closed out a bunch of stuff lately, and we're still short Lulu, which still looks terrible. It can't even seem to go up on a good day, and TJX, which can seem to go up on a good day, but still doesn't look so great. So I've still got some shorts. I've got 2 shorts and 4 longs right now, and actually one of my longs, Apple, is a half position. So, I'm still more long than short, but you know where I'm looking at, right? I'm looking at this area right here. I'm thinking that 1950 through 1954 is going to be resistance. This line that used to be, whoops, I didn't want to move that. This line that used to be support should now act as resistance. This 50-day moving average should also create some resistance now that we're under it. Who knows? Maybe the market blasts straight through there and blasts straight through 2000. And if that happens, well, we've still got some long positions and we can always buy more. But at the same time, we try to go long the good ones and short the bad ones, and that's the kind of philosophy that should help us regardless of whatever conditions we face. Okay? All right, gang, thank you so much for all the great questions and for your continued attention and input. We appreciate it here. And that's going to do it for now, but we'll be back in just a few days. So until then, my name is Ed Ponzi. Thank you so much for listening. We'll see you back here very, very soon.